Market information that matters to you on Market Talk. Now, back to Jesse Allen.
And we're back here on Market Talk today. Jesse Allen with you, broadcasting live from Dakota Fest in Mitchell, South Dakota. And we appreciate you making us part of your day as we take a look at the markets and information impacting rural America. Pretty rough day on Tuesday in the market trade with grains under heavy pressure. Livestock, cattle had a good day, but hogs were under some heavy pressure as well. Joining me now to talk about the market trade, Mike Miner with Professional Ag Marketing. Mike, it is good to catch up with you, man. How are you?
I am doing swell. It's nice weather out here. I'm happy to see you.
I am happy to see you as well. And yeah, nice weather compared to, I guess it was maybe $1 million rain for some yesterday in the region out here. But overall, cooler temperatures. We can't go wrong with 70 degrees and clouds in middle of August, can't we?
Oh, well, I'll tell you what, this year so far, it's been the extremes. Either we're getting no rain or we're getting 5 inches in an hour.
Yes.
So It was nice to get one that kind of drizzled all day. We've had some cloudy overcast today, not too hot. About time.
Yeah, we're going to talk more weather and grains in a second.
Definitely.
I'm going to start with the livestock trade, though, from Tuesday because that hog market really just fell apart. I saw cash kind of fall apart, it looked like. What was your take in hogs on the day Tuesday?
So my outlook on the hogs is, honestly, I still think that cash is fine. Maybe product will be weaker here this afternoon. We'll find out. But really, I think it bounced up against some resistance levels, and we had a lot of long liquidation today, in my opinion. And that's one of the main reasons, or if not one of the only reasons, I can figure for a $3+ sell-off in the December today. We bounced up against this $90 level again, hit some really key points that these traders were looking at for margin, and I think they liquidated. So on the hog market, that's really the only reason I see for having this hard of a down day today. And honestly, it hit those highs. Traders just seemed a little bit uncomfortable showing any past support, and I am curious to see. We've seen really strong cash cattle as well recently. So if we do see long liquidation in these commodities, whether it's soybeans today with some decent weather, the hogs tipped over after hitting some resistance points. I don't know if cattle got it done today or not there, Jesse, but I know we got close to filling the gap on October. We may have a similar situation brewing on the cattle side if we do start to see some longer liquidation there as well. So I'm going to be watching that over the next few days on the cattle market.
Yeah, I didn't see either. We filled that gap. That's a good point.
It got really close.
I'll have to look. It was really, really close. One other thing on the hogs as well that's interesting, August went off the board last week. That cash index still around 120, 121, yet we have October after Tuesday's close, 96.57.
That'll make a guy uncomfortable.
I'm really curious what's going to happen there. Is that cash index going to fall apart here soon to come more in line with October as the front month? Or is October going to go up to it? I really don't know what way we're going to go here.
I want to say it's going to meet in the middle because I have a really hard time believing you're going to get October to come off the board at plus 120 as well. So I'm going to say, hopefully we can get that thing and stay in the hundreds. But at this time of the year, it's really hard to have too bullish of an outlook on the hog market. But I will say with fundamentals that we currently see in the hog market, plenty of strength. We are a little bit worried about kills here going forward maybe, but honestly, I would like to see some more support on that October for them to at least recognize where the current cash market is, in October being the front month. So yeah, I would like to see some support here on October, but I'm not going to give it forever, that's for sure.
On the cattle, you mentioned cattle a little bit. Cash trade, really haven't seen any develop this week, but we've seen some of those asking prices, especially in the southern feedlots, 142 to 145 now. We look at cattle and we think about some of the sales we've seen. It's still not really selling too far out. We're pretty current, it feels like, in feedlot country. Yep. So I wonder, with the break in corn today, obviously a good support for cattle, but 185 feeders, 180, 185, 140, 150 fats, those are still pretty rich levels. And you mentioned, filling that gap or whatnot. I'm curious how this cattle market's going to respond as we go later into quarter number 4.
Yeah, and we've seen good bids in the West, and for now that's helping out. Today's action was trying to make up a little bit of yesterday's sell-off there. Industry feels pretty current, like you talked about there. We've been harvesting a lot of cattle every week this summer. Cash continues to look stronger for this week again. Nice to see the 140 plus out of the South. How much does it have left in it? That's going to be the $1 million question going forward. So manage risk accordingly, I think, based upon your tolerance. If you're thinking, I should really get something done here, we're at the top level of these ranges, prices are really high, then that's fine. Or, if you do want to reach for a little bit more, just know what you're reaching for, because you're going to be asking for quite a bit past this point.
Mike, let's go back to the grain and oilseed trade. I think we know the story. We were talking about it since Monday, since we came back from the weekend. The China economic woes are a factor, and worries about demand, less demand from China, recession fears, crude oil collapsing, and then the rains that we saw in parts of the Western Belt that definitely hit some of the drier areas. How much did it really help? I definitely think soybeans, it helped. I think that was reflected in Tuesday's markets. Corn might be a little too late for some, just from what I'm hearing from growers, especially growers here at Dakota Fest. Overall, though, it just felt like a combination of all those factors really just kind of weighed on the trade on Tuesday.
Definitely, and I would say soybeans are leading the way. Perfect weather for the soybeans right now. We're getting nice rains. We've had perfect weather in August, so that's been awesome. So soybeans leading the way lower. Corn's just kind of following along, I think. It's a little bit less cool to be long commodities right now, I think, with crude oil trading below $87 for the first time since last February. You're seeing a little bit of long liquidation on the soybean, corn, energy markets. Saw some today with lean hog markets. So I think that there's something to be said just about money flow as well. And then this transition from inflation hedge to recession hedge is typically a rough one. And I really look at the year of 2008. We've had a really strong correlation with futures between this year and 2008. And a year like that's really scaring me right now when I look at the charts. And some of the more macroeconomic things that we've been following, that scares me a little bit as well. And it's just not as bullish commodities when you start talking a really strong U.S. dollar. You're talking a lot of acres in Brazil. You're talking so many different factors from a global perspective, and China problems.
Yes.
Yeah.
Well, and you made a great point there, and I want to talk to you a little bit about this. We're going from an inflation hedge to a recession hedge, it feels like, in the commodity space, the ag commodities, and we're doing it at a time when we normally start to put in our seasonal lows. Is that amplifying the move, do you think?
It definitely encourages it. I mean, it makes it an easier decision.
Definitely. I mean, that's something I think for producers, it makes it even tougher to market. And then you throw on top of it computers and algorithm trade, and we could be down 30 cents in a matter of 2 minutes.
It gets choppier.
It gets choppier, and it really just it makes it stressful, and it increases the volatility, I feel like.
And I feel like you've seen that recently, too, with the S&P market, because we've put so much strength in that S&P recently. So you've seen money fading out of corn, soybeans, crude oil, and it's been kind of filling back into the S&P. Now, as we get toward these equities towards their older highs, 4,400 on the S&P or so here, as we're approaching that, maybe they'll say, that's enough in the meantime here. We've got enough problems going on that we should tame ourselves a little bit. Then you might see some more money flow pull back. But honestly, it's been a risk-off environment, and it's at that time of the year where that is a pretty common thing historically.
So talk risk management with me. If I'm a producer and I haven't maybe made enough sales, I have a better idea of what I have for a crop this year, and you're seeing the markets liquidate right now. And what is my strategy here? What am I thinking? I know it varies, from operation to operation, obviously, but I know there's some general things to think about. So what are your thoughts with risk management in this environment in the grains?
Yeah, so I mean, you made the point. The number one thing to identify is your risk tolerance. If you sell a little bit of your grain, if it goes up, are you going to be mad? If you miss out selling before the big sell-off, just identify your risk tolerance. That's the number one rule. And I think the first thing that applies to everyone is always basis. We got to sell our corn somewhere, right? So basis on the corn market has really started to pull back. So if you got old crop corn, I'm pushing that really hard right now, because I think you see what you saw in soybeans here recently, and you see that basis pull back as you get closer to new crop. The next thing I think would be on new crop basis, here around this area, I'm not too concerned. We've got just enough problems around us and good demand still from the livestock and the biofuels industry that I think that we've got good basis levels from here on out. I'm not too worried. Typically, I'm locking in new crop basis right now. But so that'd be the one thing. Watch that. Eastern Corn Belt, I do not like their basis levels right now very much at all. It's just too weak. So I'm going to shoot for a little bit better there. Going forward, I would say try to sell in this range. I mean, you're chopping around between the 650 to like 580 level. I would like to see them get down and fill that gap, but hopefully we find some support there. So I would be looking to try to make some shorter-term moves within that trading range and kind of hit the highs and the lows, and just kind of try to hop on board here where you're comfortable at. But honestly, if you have good yields, it's not too bad to be too early at this point. I mean, just get done what you need to before harvest. So,
Mike, before we run out of time, if folks want to talk with you and the team at Professional Ag Marketing and they want some advice, what's the best way to do that?
Yeah, give us a call at 507-449-2030 or go to our website at Professional Ag Marketing, and we're active on social media programs as well. So please reach out to Jesse or myself.
Definitely. ProfessionalAgMarketing.com is where you can find them. I should plug as well, Wednesday afternoon, 1 o'clock at Dakota Fest. You, me, and Dwayne Bussey of Bolt Marketing will have a market panel in the Reeves Education Center, and I'm looking forward to the discussion. I hope producers who are coming to Dakota Fest bring their questions as well and try to get them answered.
Sounds like a party.
Definitely. Mike, always appreciate it. We'll talk to you soon. Thanks so much for the time.
Thank you.